What's going on, everyone? Welcome to the channel. I'm Crypto Neil. Today we're going to discuss Bitcoin price action and just how low can this sell-off go. If you're currently actively trading in the market, you might have had some annihilation happen in your portfolio. So I'm going to discuss how exactly we can protect those assets from any further downside, and we're going to see where price is going to go next with Bitcoin. So without further ado, let's jump on into the charts. So here we go. So looking at the Bitcoin chart on the daily time frame, you can see we finally have had this lower boundary violated, and targets to the downside have finally been met. So ultimately I was looking for, if we got 3 settlements under this line, I was looking for the next target of 84K to be met. We actually got that, and we're having candle closures currently right around that level. We did wick below, which is quite normal when we get volatility expansion. So looking at the BBWP, we have gotten extreme lows on the daily time frame, which are marked by these blue vertical bars. Then we have a cyan color in the line, which basically, once you get that cyan color to the upside, plus you get above 15 percentile, that is good enough for me to say that you are getting volatility expansion. Usually with volatility expansion, you get some sort of major price movement. So whether up or down was what we were trying to determine in the last video. We did get the closure below, which indicated we were getting price action to the downside. And from that price action, we were discussing a potential deviation play to form, which is where price would come down, base, and then attempt to come back within the range, back test it as support, and away you go, targeting essentially new highs eventually. So that is what we're looking for to form. So far on lower time frame, price action looks like it is basing out here around this 84K region. However, there's a few things to keep in mind before you just blindly long this, assuming you bounce, create deviation, and go to all-time highs. Although that's a very attractive trade at the moment, you do want to be aware of certain levels before you take that trade. So essentially, looking back a few months when we had this kind of descending range forming, and then ultimately broke out upon Trump's election news, this here where we went vertical with price, essentially you could call this inefficiency, or you could call this a gap, because you moved up just all green candles, no overlapping price action, just went straight impulsive. So typically when you do go impulsive, then you consolidate and come back down, you typically fill most or all of this inefficiency. So for me, the inefficiency zone is around 77K, and some might argue that it's down around 68K. Technically, you can go as low as 68K with a retracement, with a sell-off, and still remain in bullish structure long term, like on a weekly or monthly. So coming back down and filling this inefficiency where we ran up here between 77 and 84K is quite healthy for price action to resume to the upside. And that is why I still keep looking for this deviation play to come back up in the range and ultimately go higher for new highs. However, if when you're filling this inefficiency gap, actually I'm just going to highlight it off in the chart so you guys can kind of reference what I'm talking about more easily. Just need to find the right tool. Here we go. So essentially, I'd call from here to here, these 2 green body candles. That's your inefficiency, where you've just run up without price ever coming back down to backtest. This is the first instance where price has came back down to backtest. Now you can see you got a nice push up to the upside, decent volume, but a nice wick has formed. And you can see from previous support levels, typically when you get these giant wicks after a large move down, that is where you're going to start to create a base. So we could essentially start ranging in this zone all the way up to 90K and down to 77K, and this is perfectly healthy for price to basically decide whether it's going to go lower and test the bottom side of this range or go higher. So we're looking for this deviation still. Any price between 77 and 90 is perfectly healthy, but ultimately if you are looking to go long off this, you want to go long somewhere where price is wicking off of. So right now we currently have wicked off of around 78k and closed back at 84k. 84k to me is a major Fibonacci zone, and that's why I'm watching out for it. If we apply a Fibonacci to the chart, essentially, so you're going from the high to the low. Now the low can be perceived as many different things. The low down here, which was the low of the previous range. You can go to the next low, which essentially started creating this upward price action. But for me, this second low here, this first higher low, is the most confluent with the Fibonacci levels that are currently interacting with price. And what do I mean by that? When we apply this as our low in our Fibonacci sequence, the 382 comes in exactly where we wicked off of, and the 50 is exactly where we are currently holding, just slightly above, forming support. So, and as well, the 618 is where previous support has now turned into potential resistance. So all of these levels are being interacted with price very frequently, and they're validated because price is either bouncing off of this region or rejecting from these regions. So to me, that's the most logical place to use the Fibonacci, and to use these lines or these levels as guidelines to essentially, if you break below, you can short to the next level. If you bounce off of, you can long to the level above. So those are potential trade opportunities I'm looking for in the coming days and weeks. Still looking for price to base in this zone and form this deviation, which to me would offer the greatest long. And I did speak in the last video about kind of risk reward shorting after breaking to the downside after a large move. There's less potential gain to short than there is to long. So ultimately I remained inactive in the market because the risk to reward to the downside wasn't as good as the potential trade to the upside. Now that we're price is basing and forming a potential bottom, risk reward to the upside does look quite healthy. So if we did, say, take a long position off somewhere within this wick, targeting the highs, that would be accepting that this is deviation and coming back into the range, putting your stop loss somewhere below that wick low or below the 382, which should hold as support. Again, 6.5% to the downside, whereas 30% to the upside. A nice 5-to-1 risk reward ratio. That is why I'm looking for longs instead of shorts. You could apply the same principle, like if we break the 5-0, we are going lower. You could scalp that trade, but ultimately I think a 5-to-1 risk reward is much more attractive than any play to the downside from here, especially after this massive sell-off has happened. So if we jump down to lower time frames, we can kind of get an idea on how price is basing. So here we have, I'll just highlight them. Lost my brush tool. Okay, so we have 1, 2, 3 lows that have formed, and then we have one. If I go to the RSI, we have 1, 2, 3 lows in RSI, and as you can see, this low is the deepest. Then we have a higher low followed by a second higher low. So this here is 3 drives of bullish divergence that is formed on the RSI. So we have lower lows in price and we have higher lows in RSI. On a 4-hour time frame, that is the clearest long signal you're going to get. Have a nice little V-shaped recovery. Here I've marked off with these yellow lines, kind of levels that price has attempted to base at and then fell lower. This at 84k being the most valid. It's the 382 on the Fibonacci. It's found support it basically deviated, came back within that, and is now finding as support again before ultimately, I think, going higher back to the 5.0 around 90K. So that's enough bias for me to create a long position to the upside. Hopefully we get the bounce confirmed. It looks like we might actually put in a higher high already after not really going much lower than this V-shaped recovery. So that's what we have to look forward to in the coming weeks. How long is this video? So 10 minutes. Actually, I'll just go over Ethereum really quick. Ethereum is another one I'm watching out for. You can kind of see here I had a line drawn on the RSI because I was expecting some sort of divergence to play out between these two lows, and then technically that got invalidated before moving higher. So although I am very bullish on Ethereum long term, I just want to wait a little bit longer for price action to develop before potentially taking a long. But the same kind of opinion goes for Ethereum. We broke this weekly structure, and ultimately I would be looking for price to go lower if we close outside of this structure. The only way this is invalidated is if on the very next period you come back within inside this range, and then I'd be looking for higher. But if you look all the way back on the weekly, back to I don't know, May, November, this is all 2023. We never had this region back tested that I highlighted here. So if I just drag it all the way over, you can see that price is essentially about to back test this area around 2K. Again, same as Bitcoin, you can come all the way down to where price initially broke out of and still remain bullish structure for the future. So back testing around 2K, basically as low as I'd say this breakdown point at 1834. That is something that you could essentially blindly take a long at because you've never actually back tested that breakdown level once you broke out. So for me, that's a clear long position, probably best risk reward if we go that low, but we could just come back inside the range. So these are things to look out for in the future, in the coming, like I said, days, weeks. So that's Ethereum and Bitcoin. Those are the levels to look out for. Hopefully you guys have been staying safe in the market. Times have been essentially very, very intense. If you're sitting in long positions or sitting in meme coins, your portfolio got absolutely annihilated. So understanding these key levels, where the market is going, is going to help keep your profits safe. It's going to help you know when to be actively trading the market, when to be sitting on the sidelines, and when to be long, when to be short, when to be hodling, and when to be sitting in cash flow. So hopefully this analysis has given you some insight as to where the market is going, and it'll help you keep your profits safe in the future. Also, I want to mention, if you're new to the channel, I really do appreciate the subscription. If you're watching for the first time, smash the like button, leave a comment, and I'll be sure to get back to you. Maybe you want me to go over some altcoin charts, or just essentially other investment strategies or other trade strategies. So drop a comment and I'll make a video for you in the future. Till then, stay safe. Let's grow together. This is Crypto Neil signing off.